It appears Black Monday has been canceled. We're going to keep it short today, go over some things that are happening in the markets because the big day is Wednesday with CPI. All that and much more on today's episode of Money Never Sleeps. Welcome back to Money Never Sleeps. Joined by no one today, just me. J-Web is feeling a little bit under the weather, so we're just going to carry on, do a short little episode on what's going on in the markets, keep you guys updated for the week ahead as well. Nothing I say is financial advice. I'm not a financial advisor. Nothing we ever say is financial advice. If you want to make any decisions, consult your financial advisor. Do so at your own risk, do your own research, yada, yada, yada. All has to be said. Moving past that, you know, there's a lot of movement in the markets today, and a lot of people are kind of excited, right? What happened last night was that GDP was revised lower in Japan, and that kind of scared the markets in Japan and in Asia. Asia kind of had a really bad night last night, but the problem is Bank of Japan intervened once again. So let's start with what happened in Japan, and then kind of how that relates to what's going on in the S&P. Pull up Japan's Q2 GDP growth. LO being why popping up on the screen. Get out of the way. But yeah, just look at the summary on Reuters. Q2 GDP at 2.9% annualized versus the initial 3.1%. So obviously it's a miss there. It's nice that they revised it down after the fact that the numbers have been kind of printed already. That's not problematic whatsoever. CapEx consumption revised down slightly. They're also talking about how consumer expenditures have been down. People just aren't spending as much money in the Japanese economy. It's a bumpier outlook for consumption. Could cloud BOJ rate hike plans? Most economists still expect further rate hike by year end. Right. So it's kind of a messy ordeal going on there, right? Because we continue to see the yen kind of strengthening. There's a level that they're definitely supporting to make sure that it doesn't go below that level, or I guess get stronger than the dollar past a certain level. But is the economy actually doing that great? And we know that the Japanese economy is a proxy for, the U.S. economy, very similar in that, they're both capitalist countries. But the problems there are also the problems that we have here, except, obviously the BOJ is a little bit more lenient with their rate hikes. They're afraid of hiking rates, but they're probably going to be forced to, whether they like it or not. The U.S., obviously, we're fine hiking rates, but the problem is we have a problem cutting them, and it's going to be the interesting dilemma of one's raising while the other one's cutting. The rest of the world's also cutting as well because we're starting to see extreme slowdown. I mean, between Canada, the U.S., which is yet to come down, but some of these other economies that have been cutting rates, Bank of Europe still deciding whether they're going to continue to cut rates. We got a lot of things that are going on in the central banks that could definitely be a dread on the markets, but it looks like the Bank of Japan is kind of facing an uphill battle against the other, federal banks in the world or central banks in the world that are doing literally quite the opposite of what they have to do in order to save their economy. But with this data, why is this problematic? Well, it's problematic because they also are doing this. Let me share my screen once again. A little bit of history. Sorry, guys. Right here. Bank of Japan's offer government debt on spot basis this afternoon. This was last night for their trading day. I guess after their trading day. Seems like they are just trying to keep the liquidity train going. This is major, major problems for them because, again, we do know how interconnected the Bank of Japan is within the Japanese economy. They have Japanese government bonds. They have equities. They also are holding yen, and they're trying to do this balancing act of making sure that all of them are absolutely equal. But, I don't think that it's going to work out too well for them. It's just a matter of buying time before something happens. And I say something happens, and I mean something that's going to really drag down the markets. We're having that hint that something bad is going to happen. We don't know what that black swan could be, right? it seems like September is the month it's going to happen, just based off of volatility and the way that it's charting. Doesn't necessarily mean it has to happen in September. When we get these liquidity injections, are we trying to fuel this equity rally or keep this level up long enough for people to get out for, to prevent the inevitable that's probably going to happen? Probably. Looking over to the US right now, I'm going to pull up the reverse repo in just a second. Pull up the S&P real quick because I got to cross over to that one. Let's go here, scoreboard. Let's go box score. Reverse repo. Yeah, we were talking about the reverse repo getting pretty low, and we were talking about this back in December 2023, early 2024, below a certain level. It's probably going to get problematic. Well, we've kind of just been churning sideways here, and a lot more people are using the reverse repo, and the values are going down. And could we drain it to zero? It's very possible, but I mean, for the past few days, we had one read that was as low weeks ago. Yeah, like right there. Like if we look at what happened on August 5th, August 6th, which would have been the rally that we got from the carry trade unwinding, it seemed like a lot of people possibly using that right here required that amount of liquidity. Obviously it started going up again, but we're at a pretty similar level to where we were when the yen carry trade unwound or the first time. And we look at where the S&P is. I mean, it's green today, but it doesn't necessarily mean that it's going to be green for the future. It seems like there's a lot of liquidity that's being extracted here. For what? Who knows? I think it's pretty much keeping the equity markets afloat, alive, making sure that there is some flows coming in, because we've been seeing a lot of flows out. I mean, you don't need me to tell you that how bad 4 red days in September to start the month off is, to see how much money flew straight out of the equity markets, right? Especially when you look at big tech. But that's kind of what we're looking at. There's a lot of liquidity that's being drawn out, provided, but it's not being provided in a way from corporations. It seems like it's being provided by governments or central banks, and that's kind of hinting that maybe there is a liquidity problem somewhere around the corner. I think that the liquidity problem has been here for over a year, right? Since BTFP, you know, collateral shortages that we've seen. I mean, we could look at SOFR, and we could look at some of these other charts and see how much money is out there versus how much collateral is out there. It's going to tell you pretty much the same thing that it's telling me right now. It's that a lot of people are requiring some of this money. The bad thing is, when a lot of people get that collateral, they got that leverage, the actual liquidity. What were they doing? They're doubling down on their bets. And that's what Japan kind of did. Maybe that's what they're doing in the U.S. We have no idea. And I mean institutions that are hurting, not necessarily the central banks, right? I think the institutions that are hurting might need the price to go up a little bit because maybe they're still on the wrong side of the yen carry trade. Who knows? We'll find out soon enough. But that's kind of what we're looking at across the board with what happened in Japan last night and how that correlates to the U.S. markets. Right now, if we look at what's going on in the U.S., we can see that we're doing fairly well. Oh, that's the banks. Don't want to look at the banks. We'll look at those in a few weeks. We're looking at the S&P, and it's pulling back a little bit now, but it bounced pretty hard this morning. Obviously it opened up a lot higher. But where we look at this right here, where did it get rejected? Well, it kind of got rejected right around this level of support that we had back here on Thursday, where they bounced off of that, finding some rejection there. A lot of people got really excited today because the market's up a lot more. After having all these downward days, it's the first up day, really. I don't even consider this. Yeah, I mean, that's a down day too right there. But, this is the first update that we've had in some time, at least the first day in September that we've had this year. And the problem with that is, if we are in a crash, you're going to see green days like today. They're going to be scattered throughout. You can get green days in a crash, in a financial crisis. It's very possible, right? It's a breathing. It's a breath right before continuation. It's very possible. Do I think that this correction's over? I don't know, but I say give it a day or two to see how this plays out, because it's very possible that by Wednesday and the market, this whole thing could be a lot lower than we're currently looking. Right? It could be lower than that white line that we have set here at 53.76. It's where we found some support in the past. This is August 5th, but this is kind of like a neckline that we want to check. And if we lose that, once again, that's probably a good chance that we're going to be going a lot lower, maybe even closer to this 5,000 level. And I don't think that that's the end of the move, right? I think losing this major level here at 53.85 or so, right around there, and then losing say 5,000, I think that tells you that we're going much lower. And obviously we have our levels, and I think just naturally too, there's an argument to say that we are going a lot lower. There's not a lot of support built on this rally to the upside. We haven't tested it. We have not back tested any of it either. So that's going to be something that we have to watch. But again, we're very early in this process, and I think it's a crash. That's just my opinion. It's not financial advice whatsoever. I'm not panicking, but I do think that we get these green days. If we zoom out, is it really that big of a difference? We're up 1.29%. We're up 670 points or so. Well, no, especially when you're still down from the height. Let's say 3%, and that puts into perspective too. Like, yeah, we were probably due for a little bit of a rally here or a correction, some type of bounce. Maybe it's dead cat bounce. We'll see. But people that were calling for an absolute correction, waiting for a correction, to the upside because we had a few bad days and you still think it's a bull market, you have to be a bit, mad, I think, to think that little pullback is considered a correction. No, we have not seen a good correction in this market whatsoever. Um, we could say this to August 5th is a 10% corrective move, right? The height in was this July? No, yeah, July to August 5th. That whole move down from the carry trade, you could say that's 10%. That's a correction, sure. I don't think that carry trade's also unwound completely. And I think that we are going to probably lose this level here once again, and we're going to have to find out where we belong. I'm not going to go back to 2020 or 2008 or 2000 to see how the S&P is going to react. But just looking at this in itself, when the S&P does correct on, say, a good basis, let's give it 30% or so, it takes us roughly to about 40,000, maybe even a little bit less than that, 40,000 or so, or 40,000, my bad, guys, 4,000 in points, so right around in here. It's at 29 to 30%. That's where we would probably be. It's a good level. I think that's very reasonable level. I think that the S&P could hit if we do go into a crash. Could it happen quite quick? Yes, absolutely. I'm not saying it's going to happen overnight, but within 2 months, I think that is completely possible. And if it's more, it's more. I think that there's a good chance to say that if we lose this 35 level, we're going back to the COVID lows. 22, maybe a little bit higher than that, maybe like 23 to 22. That's still something that I'm open to because I think that there is going to be a bigger problem soon enough. But liquidity will come back into the markets by way of QE. I think central banks will be forced to inject more liquidity. But again, what does that cause? More problems across the board, unless consumers don't have the money to spend, right? I think a lot of corporate individuals, corporate entities are going to be able to rebound with a lot of liquidity, come out on top of this. But I think that a lot of individuals will not have a job for a period of time. So that might keep the inflation down somewhat. Again, I think demand and, how much liquidity is coming in really impacts the price of inflation. We'll see about that though. Other than that, nothing too crazy. I mean, if you look at the VIX, I know it's getting crushed like crazy today, but once again, it's still at 1941, which is on par with average. That's where the VIX probably should be. So if we're getting a little bit of a correction here, I wouldn't be surprised if we continue moving up towards the end of September. If we do get some more volatility in the markets. And again, when I look at the Nikkei in Japan, let me just go back to this real quick too. This was August 5th. This is where you rallied to, and this is where we currently are, and this is where we were last night. We were at 35,226. We closed around 36,235, so they bought back the whole dip. But that was because they just offered them all that fucking money, pretty much, to keep the rally going on spot. What does that mean? Well, I don't think it means very much, to be honest with you. I think that if anything, maybe we get a little bit of a bounce here. I think it's going to roll over once again. You're probably going to be at this 31 level fairly soon for Japan. Do I think it holds? I don't know. I really don't know. But I think that if you're able to get the money printer going, the United States raises rates, causes the trade to kind of unwind once again, probably coming down below this. Look at the yen right now. This is probably the most, I'm not saying manipulated, but it's the most intervened chart you'll look at. I mean, there is so much downward pressure. This thing just wants to go below this, which makes the yen stronger. But they're just defending this level like it's the last night on Earth, right? You see the wick up here too. It tells you that it doesn't want to get weaker; it wants to be stronger, and that's problematic for Japan. So I think that by next week, if we do get a rate cuts, whether it's 50, 25, I'll even be open to 75 at this point, depending on if they see something in the system that we don't necessarily know about, and they want to cut rates faster. You will probably be in the 130s for the yen, and that's problematic for all equities. That's good for the VIX, and I think everything's kind of just in the right place at the right time right now to see that unwind, and we just have to be patient and wait for it. Like I said, one green day doesn't make a market. You're in a crash. It's going to be problematic. The other thing too for the yen, where it could really amplify things being worse, is if oil decides to start bouncing here. If oil decides to just start climbing for whatever reason, I don't necessarily know why oil would. I think demand is really driving it down, but there's black swans that could change, the course of a chart. If oil starts to go up, the yen is going to be in absolute shambles. I think the Bank Japan is going to lose control of the whole intervention method, and I think they're going to be forced to kind of let this thing play out as it should, the way it probably should be played out. But I think the intervention methods really screw up the yen, because let's remember, Japan does import all of its energy. They're energy dependent. I mean, if oil starts to increase in price, the yen is getting stronger. It's just a recipe for disaster at some front. How that breaks down, what is the break from? I don't necessarily know. I don't know if it's going to be, the bond starts, start going up in value, equity market starts dumping, or if the yen just starts getting stronger or weaker. But we do know that that's something that it would affect any nation, but Japan more so. I think they just aren't prepared for some type of events that could off throw anything that they've pretty much been working so adamantly on for the past month or so, maybe even more than that, to protect that level of 141. Um, this neckline here, I mean, even as early as December of 2023, I think it's time that this is going to see some chaos, and they're not going to be able to contain it. So outside of Japan and the yen, I do want to just look at one last thing, and that's Bitcoin. Bitcoin is rallying like crazy right now. It's up, 1,500 points, 2.81%. Does this mean anything? No. It's another rally that we were talking about, guys. Wave one, wave two, wave three, wave four. Wave four can't go higher than wave one. So you're roughly 57,227 or so, we can say. But I do think that this wave five is going to probably be extended. It's going to probably take us down to maybe 46, just to be in line with this trend line that we have here, unless something crazy happens. But I do think that a lot of people are going to get trapped on this Bitcoin move. That's just my opinion. I think it's really easy to see these green candles and think like maybe this is it. This is, that was the dip, and we keep pushing the price up. We don't necessarily know how the market will react to CPI. That could happen the day before, could happen the day after, could just not react whatsoever, and something else happens, right? Busy few weeks ahead of us. We got CPI on Wednesday, we got PPI on Thursday, I believe, and next week obviously is FOMC on the 18th. A lot of things that are lining up for that day. We have OPEX as well on the 20th, so next Friday. This market can be very volatile in a short period of time. We're starting to see these major swings even in TradFi. We're seeing the swings to the downside. Now we're seeing a bit of a swing to the upside. Nothing crazy, but that's kind of the sign of an end of a move, and we're probably going to see where this is going. The direction of the market is more important than where the market goes on a day-to-day basis. The direction right now seems to be to the downside. We have to get confirmation. I think below 53.76. That'll probably take us to around 5,000 or so, right around here. This red line. Given that, then you kind of know that if we get a green day here or there, we're seeing a lot of scalp trades, but it doesn't necessarily mean that the market's going to reverse and go to the upside. We've had up only for a period of time. Now we're just waiting to see if this direction of the market has changed, and if it has, then cases, the macro look is probably much lower than where we currently are. So that's just thoughts on what's going on here. I don't want to really go on too much about anything else. The markets are still boring to me. I think the markets are going to be boring. I think we definitely warned about a lot of the crazy stuff that's been going on in the markets for about a year or two now. you know, is what it is. Just, do less. And I mean, do less in terms of just like stressing about the markets. Can't force anything. Just look at it. Go on with life. Keep making money. I think for me personally, just stacking cash at this point is going to be vital. Knowing when to take profits and, you know, not getting too caught up. This trading, this shit sucks sometimes and sucks to look at numbers. And I think there's a good chance that it's going to suck for a lot of people if they're on the wrong side of things and their portfolio continues to dip, or you start to see more red days. And these little green days give you hope, but you have to understand sometimes too that market just isn't what you want it to be. It is what it is, and that could absolutely fall apart in a matter of seconds, days, whenever liquidity dries out. I don't think we're far from that. So we'll leave it at that. Thank you guys for watching. We'll be back maybe Wednesday. Friday, I will not be here, but we'll come up with a new schedules, have you guys on here. It's going to be a bit of a weird September, maybe a little bit of weird October, just things happening all the time with work. So we'll keep you posted. Thanks for everyone being here, and we'll see you all next time. Take care.